Hello, everyone who's joined. Thank you so much for joining today's webinar. So unlike a normal webinar where we walk through a presentation, we're joined by a very special guest, Alex Larson. I'll ask him to introduce himself in just a minute. I recognize most of the people online, but for those of you who don't know us, Fifth Era, we're a specialist investment firm that focuses on frontier tech, specifically the intersection of the internet, blockchain, and AI, with a deep focus in blockchain through our brand, Blockchain Co-Investors, and the fund of fund. And through that fund, we've invested in blockchain capital, I believe, which is the first venture firm focused on blockchain, and now since rebranded BCAP, and had a very good experience with them. And so today, instead of walking through a presentation, I have Alex, who's a general partner there, and also my former roommate when we lived together in New York as investment bankers straight out of college, who now leads a lot of the investments they do there. So we're going to talk about the current market, whether we're in an AI bubble, the intersection of blockchain and AI, how specifically BCAP is investing in the space. And then we're going to try to relate that as well to how single family offices and high net worth individuals might be able to access this space because blockchain capital has all sorts of LPs, as you'll hear from large institutions, pension funds, but also family offices as well. So Alex, how are you doing today? Thanks for joining.
Doing well. Thanks for having me on, Mitch.
So maybe before we get started, do you want to just do a brief, just very brief background on BCAP and yourself? Just to, maybe talk you guys up a little bit. If you just go to the Fortune 100 crypto firms, BCAP was just made the top 10 list. So congratulations there. And
Oh,
although
know that.
And although you are now many years past 30, you were at one time Forbes 30 under 30, just to talk you up as there as well. But why don't you do just a very brief background on the firm and yeah, what you do at BCAP.
Well, not that many years past 30, Mitch. No, but hi everyone. I'm Alex Larson, and like Mitch said, one of the general partners at BCAP. So we started in 2013. We were the first VC firm to back founders who were building the Internet of Value, so the infrastructure and applications that form the on-chain economy around blockchains. And that's what we've been doing for the past 13 years. That's taken us in a bunch of different directions. We've backed companies like Tether and Circle in the stablecoin space, Coinbase and Kraken in exchange and brokerage, World in identity and AI, Blue Sky and social networks, Polymarket and prediction markets, and a bunch of other application and infrastructure level companies. As for me, I joined the firm 8 years ago. My academic background's in systems engineering and computer science, and I spent a bit under 2 years in investment banking before joining BCAP in early 2018, and that's when Mitch and I lived together in New York.
Yeah, super exciting time. And you guys have just really covered so many different verticals within the space. Um, I guess before we get into some of the specific topics, I guess just to set the scene, because I know you guys, it's been publicly announced that you're raising, what I believe is your sixth fund, the growth fund in the venture firm, or the early stage fund. When you're speaking to family offices in some of those LP meetings, can you just give us like a temperature check on, those families, those allocators? Like, what's their current appetite for frontier tech? Are they nervous about what we're seeing with SpaceX IPO? Are they, doubling down? Maybe just, in some of those LP meetings that you've been through, what's your kind of sense just on their state?
I'd say cautiously optimistic. I mean, the market is not uniform across the frontier. I would say some parts of the market are relatively underappreciated. Some have, seen everyone pile into them. But generally speaking, I'd say family offices are excited and generally underexposed, or at least feel underexposed in pockets of that frontier, whether it's AI, crypto, robotics, whatever it is.
Yeah, the only thing I'd add there is I just got back from a fundraising trip to Switzerland, and I do, I'm based in London, so I do a lot of work in Switzerland and with the Gulf. as well as in New York. And, it was very interesting because we've seen a lot of multifamily offices add a team specifically for direct investments and a lot more focused on those pre-IPO names as well. So people are definitely very interested in the private market, whereas before maybe they would have had a huge public book. But given the state of the market and these companies are getting larger and larger valuations, at least just what I'm seeing is that there's a lot of focus on obviously the big names, SpaceX, Anthropic, OpenAI, which we'll talk about, but also wanting to go into names like Tether, Kraken, Polymarket, Kalshi. You see a lot of activity now in those kinds of names,
Oh,
which
absolutely.
I
The
think.
secondary market's been so overheated. I don't think I've ever seen the secondary market this active. So definitely seeing the same thing on our side. And I mean, at least for some of the more actively traded names on secondaries, these are like almost quasi-public companies at this point.
Yeah, and we can come back to it, the kind of lessons learned at the end, but we're seeing a lot of layering of SPVs where you don't actually sit on the cap table. So, that's one thing I guess we should just put a pin in that we should come back to. But, the access is so constrained in some of these names that people are actually going multiple layers through. So you have an SPV that's in a fund that's on the company, and people are actually trading that SPV share. And there's been a lot of noise in the market on that as well, because Anthropic actually said they're gonna, well, they'll at least intend to not honor some of those transfers. It's a little unclear how they could actually enforce that. But just something to put a pin in. Um, Maybe just going right to the market because and I'm checking the screen every morning on the SpaceX IPO, just seeing where it's sitting. The market is obviously hot, for the AI section of frontier tech. Are there any signals that are giving you concern in general about the market? What's your firm's kind of view? And I guess secondarily, is that impacting how you think about privates, like early stage or out of your growth fund? Yeah, maybe just talk about that for a second.
Yeah. So I mean, definitely there are signals that give me concern in pockets of the market, and then there are other pockets of the market that I think are underappreciated. And clearly attention has shifted in a really big way to AI, and people are trying to figure out the lay of the land. And we're as a firm very heavy power users of AI, and so I think have a big like a pretty good sense for the kind of customer side of the equation. And then we've invested a bit in the intersection of AI and crypto in particular, and maybe some of the second order effects of AI as they impact our industry. And so we have a perspective on that. But what I'm seeing at a broad level is, at least my view here, is that AI is absolutely a real platform shift. That's a massive opportunity. The demand is real. The compute is at near 100% utilization. So it has characteristics that are very different from dot-com bubble type of behavior. But at the same time, it's being financed in an increasingly bubble-like way. So we're seeing circular financings where like the vendor is investing in the customer, and then they're buying their product in return. And these are the types of things that I think could be potentially a sign of a frothy environment. There's also, I think, debate over GPU depreciation accounting, as like GPUs are increasingly funded with debt instead of cash. I thought it was probably healthier when that was mostly done via cash, but as that shifts to debt, that I think also is a sign of an increasingly frothy market. The unit economics of the labs is something that we're watching too. I think the assumptions that folks are making, when you're underwriting these at like, let's call it $1 trillion or something like that, I think is the latest private marks. I
Yeah.
think rely on some fairly risky assumptions. It is, at least for the last couple of years, it's almost a foregone conclusion that the way that AI is going to continue to be developed is with increasing amounts of compute being thrown at the problem, with LLMs as the maybe dominant regime for developing these things. And in my view, it's still early in the development of the technology, and you never know how things could change. So, maybe we figure out some other way that isn't necessarily an LLM of creating really interesting models down the line. Maybe LLMs at some point hit a wall. All of these, I think, would be really risky, especially as the labs are committing to massive compute deals. Any one of which could bankrupt them if they don't end up getting the demand forecasting right. So, that I think that's challenging. I think the Chinese open weight models are probably the biggest threat to the frontier tokens if a wall is hit or if progress slows down for some reason. Fable was really interesting recently because it was I would say like from Opus 4.5 to 4.6 and 4.7 and 4.8, there wasn't really a big, huge leap in intelligence. At least I didn't feel that there was, and I've been using these things kind of at every step of the way. But Fable had a really big leap, and that was exciting to see, and a sign that progress was continuing in an exponential manner. But if for some reason you go through a year or two of more incremental steps, then the reason to use an open weight model strengthens relative to paying 10 to 100 times that for frontier tokens. I think like I've seen Coinbase recently, Brian Armstrong was on X talking about how they're routing tasks based on what level of intelligence is needed. So if frontier tokens aren't needed for a given task, and that's probably 80% plus of the work that they're doing with AI internally, they're routing those increasingly to open weight models, which I think is the pattern that people are going to follow increasingly. And up until now, it's been mostly a story of you just use the frontier tokens. And I think a lot of that activity has been subsidized. The subscriptions are subsidized as it stands right now. But as that shifts to API and usage-based, enterprise pricing, anecdotally, I know of a few firms that have already blown through their 2026 AI budgets. So I think people haven't appreciated how much those frontier tokens eat into your cash flow.
No, that's super well said. I guess, for me, on the one hand, we have some of the fastest growing, just in terms of, what were the worried, fastest growing companies of all time. On the other hand, we have, I think, OpenAI's financials actually leaked yesterday or this morning, and they reported a loss of 40 billion last year. So it's kind of to that point where if they're not forecasting demand right in their compute spend, and that demand arrives even 6 months or a year later than they think, they have a huge hole to fill. And right now, that hole is being filled by the capital markets. But increasingly, as you say, some sort of maybe more speculative style financing sources. So actually, OpenAI reported, I think, a couple $1 billion of its 15 billion revenue was from Microsoft and SoftBank, who are also investors, right? So that's sort of circular. But you did mention something I wanted to go back on, which was that you're power users of AI, and also that you guys invest at the intersection. Those are both two very good ideas. Maybe just to start, what do you mean by you being power users as AI? You don't need to spend a whole bunch of time on it, but I just am curious how a firm like BCAP is actually integrating this, in such a way that you might call yourself a power user.
Yeah, sure. So I think we've been playing with everything that has come out of OpenAI and Anthropic and Google and XAI for a couple of years since ChatGPT came out. And we've found that the tools were kind of increasingly useful, but there was really an inflection point in December of last year. And that was when coding agents got good enough that most engineers stopped writing code manually and started steering agents instead. And this really started with our CTO, Caleb, who was a former portfolio company founder and then joined us at BCAP and then sold another company that we incubated, and he started and joined that portfolio company, and he led their AI initiative internally and was basically AI-ifying their operations. And he came back to BCAP a bit over a year and a half ago to basically do the same thing at BCAP.
So
And
for you guys, it's sort of trying to integrate it into the operational flow yourselves by actually building things in-house.
Yeah, absolutely. I mean, we'd prefer not to build things in-house, but we will if that's the best way to get the job done, and if we have the resources to do that in an efficient manner. So we're definitely looking for tools, but we've found that in certain cases, building our own is the best choice. So Caleb and the engineering team started using coding agents as work assistants. So we were connecting them to our systems of record, the places that we store data on deals, the places that we store our notes, these types of things. And this started working really, really well. And the first half of this year has basically seen us reorient our AI strategy around that as the primary mode of consumption. So that's, for me, that's Claude Code with a very customized harness that includes some shared resources as an organization. So we've packaged through our engineering team setting this up, all of our systems of record in an MCP server that's private and has role-based auth at the org level. And so that allows everybody to access the information that they need to do their job via a coding agent. And like Claude Code in particular, I think has been super powerful for this. Now some people are using Codex on the team, but one of those two, it tends to be the flavor. And then as you connect them with your systems of record, you can start to automate a lot of the more mundane or like day-to-day things. And so like every morning I have a daily briefing of everyone I'm meeting with that day, and basically like full background check equivalent on everyone, like a dossier on everyone that I'm meeting with, all the context. If anyone's met with them in the past, I get a summary of that. And so every meeting you come well prepared for it. We have automations running for investment memos that take into context all of our past investment memos, all of our past deal notes. We're subscribed to a bunch of data sources that track metrics of startups, and then we have a bunch of proprietary ones that we've been gathering internally. And so we kind of package all this intelligence into the context that informs us coming into a meeting, so we can be on the same page as a founder, ask the right questions, and really get to the core of what their business is really quickly. And I think the time that I needed to spend preparing for a meeting on, let's say, like a new area that's fairly hairy, has rapidly decreased, and the quality of my preparation has kind of gone through the roof. So, in that case, that's been something that's incredibly helpful and has really sped us up. I still think we're learning the best places to apply AI. One of the things that I found really interesting is there are so many podcasts now where founders that I care about are going on the podcast and saying interesting things, and I don't have time to listen to 5 hours of podcasts a day. And so I'm ingesting all the podcast transcripts alongside my notes and alongside the industry metrics and things like that. And then I can kind of do a cross-sectional review of podcasts on a specific topic where I combine a few of them and get kind of all the interesting points, and then have a refuter agent come in and like pick each thing apart. And I found that kind of a cross-sectional reading of a podcast produces some really, really interesting learning opportunities.
I mean, it's kind of fascinating. Essentially, it's like almost like you guys have a central brain system that anyone can come ask, and it will, essentially just make you much more efficient at your job. And, it kind of connects to you mentioned Fable, which is the latest Anthropic model, and the government has actually asked them to restrict its use. And I think this is a really interesting idea. In my last research piece I put out, which was about the digital autonomous economy and how our firm is investing into it, I had a very short section, which I'm going to expand on, but an idea I've been thinking a lot about, which I call the balkanization of technology, which is basically this idea that if we become reliant on these AI systems and potentially even hollow out our human capital, i.e., hire fewer people or even remove people from certain labor positions, we'll become dependent on these AI systems. And this is very largely an American-led, to some extent, innovation cycle. But given the geopolitical state of the world and the U.S. sort of acting as a different player than it had in the post-war era, one idea I'm going through is whether or not we actually will see sort of duplicative stacks built in different jurisdictions, right? And the Chinese have been doing this for years, right? So the Chinese military industrial complex doesn't use Word, doesn't use Gmail, doesn't, right? They don't have a single American software in any of their military applications. They haven't let in American social media because at the end of the day, those companies could theoretically shut down their service, make it worse. We saw this with the Russia-Ukraine conflict, right? Overnight, essentially the payment system was shut down. There were, photos, videos of people not getting into the subway in Moscow because Visa and MasterCard don't work. So I sit in London and I see a lot of this happening. I don't think Americans see as much. So Spain just started allowing Bizum, which is like a local sort of Venmo Revolut, to, mandated you have to accept that everywhere now in Spain because they're worried about reliance on Visa, MasterCard. The UK banking system is worried about this. France has just built their own version of Apple Pay. And I think AI will be sort of similar, right? If you're, I think if you're the Chinese, obviously, but if you're also anywhere in BRICS, but maybe even the Europeans, the Brits, you might think twice about, integrating, an American frontier model, deeply intertwined with core functions. Um, this is a long way of saying, like, are you guys thinking at all about that? Have you seen some sort of similar things? Is that an idea that you've come across? It's something I'm going to write about it more in the future, but I just am seeing little stories around about, new payment systems, new, French government's worried about it. Bank of England's worried about it. Spain's worried about it. Obviously, Russia, China, Brazil, they've been trying to build stuff for 10 years now. Is that factoring into your guys' thesis at all?
Definitely, I would say with maybe a filter for what's possible today and maybe the limitations of decentralized systems generally, at least as it relates to things like training, huge AI models. But this is kind of the central premise of crypto. It's an apolitical system of money transfer and value transfer that we think increasingly is an important option for people around the world to have, especially as geopolitical tensions rise and as it becomes clear that people are doing more and more business online and increasingly are being barred from participation in certain marketplaces and certain payment rails, depending on who controls those rails and maybe their political whims, which doesn't feel like a tenable equilibrium unless you have a very, very dominant position on that. And so I think today the case is that in payments, the U.S. has a dominant position there. The dollar is by far the dominant currency for trade. But there are cracks in that position, I'd say, increasingly. And, especially China and, BRICS countries generally, like they are very, very aware of this and are investing in alternatives and promoting them. And on a long enough time horizon, I mean, they're just doing things that I think the U.S. isn't. I mean, especially if you look at what China is doing and investing in infrastructure in Africa and so on. I mean, these are very long-term oriented plans that could change the balance of power on the payments front. On AI, the U.S. is again in a dominant position today. I don't think that anyone would argue that any other country can do what the U.S. labs can do in AI. I mean, China.
Especially under the current scaling paradigm, which is, compute and energy are effectively the main components. I think, sorry to interject just because I know you don't have the full hour. It's a great transition. So you mentioned obviously, kind of crypto being perfectly suited in that geopolitical context.
Yeah.
And you mentioned the intersection of AI and blockchain. Maybe just talk for a minute about that, which is really at the nexus of what we do as well. And I know you guys have made a bunch of, sort of very cutting edge investments, a la, WorldCoin, for instance, but a few others. Maybe just conceptually first, how do you see blockchain AI intersecting, converging, or sort of being additive to each other?
I think there's a bunch of areas where it might play out. Some of those are very clearly actionable investment opportunities today. Others are we'll have to wait and see if that's a place where decentralized systems can play. But I kind of think about like this: if AI makes intelligence abundant and it makes content very cheap to create. And the result of that is that pretty soon, I think to a large degree, this is already the case. You don't know if it's a bot creating or an agent creating the thing that you're looking at on X or reading on a blog online. And there isn't that verification, identity, and authentication layer. And I think that's exactly what decentralized blockchains were built to provide. Really like a trust anchor, where you can cryptographically verify your identity. And so that was one of the obvious second order effects of AI that we identified a couple of years ago. And funny enough, Sam Altman himself started a crypto company, or co-founded it with Alex Blania, called Tools for Humanity. They create the World Network. That's the best method for verifying human or personhood. So they have a primitive called proof of personhood. They have a piece of hardware that they distribute around the world. About 20 million folks today, maybe a little less than that, have been verified on an orb via having their eyeballs scanned. And so this is something that's built to be at world scale. It's the only biometric authentication system that can do that without in a collision resistant manner. And so it's kind of a necessary building block for figuring out who's a human being online in an agentic era. And they're starting to sign customers left and right and have some really, really impressive names out there, including folks like Zoom, where I think the deepfake issue is a big deal. And then probably some folks that I can't mention on the public sector side, but let's say like some of the most important players in security have embraced this solution as the way that they determine who someone is online. And so, World has been an interesting thing for us, and then Merit Systems is another one. And that's more on the payment side. So I think aside from maybe an AI antidote of figuring out what's real and verifying identity information, blockchains are also I think the native payment rail for agentic commerce. This is a very small space for now, but there are some structural reasons why stable coins on blockchain networks are a more appropriate payment rail for agentic commerce. And so we're seeing that.
You've seen, I've seen some of those big players also release toolkits, and I think Visa and MasterCard are actually letting people now play with agentic payments, and giving them the option of their traditional rails, but also the stablecoin rails.
Yeah, what they're really
So
focused on is like agents acting on behalf of a human. So shopping on Amazon and these types of things, human-looking transactions, but your agent does it for you. I think that's a very different problem than what I would call like more pure agentic commerce, which is machine-to-machine payments. That's where card economics just don't work. Like 30 minimums and the entire reversibility infrastructure doesn't make sense when you're paying for compute and you need to take delivery of it immediately. That's something that just isn't suitable to it. If you are constructing a microservice that consists of 5 different APIs that you need to discover in session with an agent, and you need to pay each of them 1 to 5 cents. Card rails don't make that possible today economically, nor can they handle the kind of volume that needs to run through that. And so stablecoins are kind of the best way to do that, and that is a very small space today. But I've seen some products out there, especially from Merit, and they have one called Agent Cash and Poncho. That showcases this really well. Actually, Poncho is probably the best example of it. Like they've connected an agent that feels a lot like Claude Code, with hundreds of different services that the agent will figure out which service to use, and it'll pay it a cent or two to do the thing that you need, and then you get the kind of end result right there, and you don't have to build out any of those integrations like you would need to do with Claude Code normally. And so it's kind of like having an agent but on steroids. It just has full access to building on most of the popular APIs on the web. And so I think the agentic web looks very different than the human driven web, and stablecoins are very clearly going to be the rails for that type of activity. So we've been investing and spending a lot of cycles on that intersection.
Yeah, super interesting. That's an area we're extremely focused on, and I've seen some evidence that already, just because of the chat bot, and I can try to put this out to everyone on here, that already it's something like 40 to 50% of web traffic they think is agentic, just because of the crawling of the web. So you can kind of see the direction of travel is that even if you still go on and you want to buy, whatever you buy on Amazon, a growing share of activity in the digital verse will be machine first. And on top of the economics in stablecoins, I also think the fact that crypto assets or assets that are on blockchains, tokenized assets, a lot of different words for it, digital assets, the fact that they're bearer instruments, right? Which basically means by virtue of you holding it, you are the true owner, So it's different than if I send you $50 from, HSBC to JP Morgan, it might appear in my account instantaneously, but the real settlement is happening, at the earliest at the close later that night, but more reality, probably in a batched version 2 or 3 days later, right before any actual dollars change. Well, with crypto networks, blockchain networks, value transfer is instantaneous, so actual the custody. And again, in a machine-driven economy, when you're doing instantaneous transactions, I actually think that that's more useful for a machine than even for a human. So something I think is really interesting. I know you said we just had a 30 minutes, so I have one last kind of question for you before we let you go. And I want to come back to that, what I said at the top, to some of our family office listeners. So again, you're in these rooms all the time. You said people are cautiously optimistic. If there's a family office that wants this kind of frontier tech exposure, whether AI, intersection AI, blockchain, crypto networks underpinning the future of agentic commerce, aside from saying go buy, Mag 7 or Mag 8, maybe now with SpaceX, what are some ways you would suggest to a family office maybe to get involved in the space, when you're in those rooms?
Yeah, I mean, of course, I'm biased, but when I think about the infrastructure that we've built as an institutional investor in early stage, private companies, it's a 14-person team that lives and breathes frontier tech, especially on the crypto and stable coins, prediction markets, these types of things. This is something that we've seen develop from the beginnings, and we've built relationships with the founders in those spaces. And so when new developments happen, we have, I think, the best means of diligencing those opportunities and finding the diamonds in the rough. And I think that means a lot on the access front as well, having established a brand and built those relationships, knowing how to underwrite them, knowing how to help guide those companies. And so I think Mag 7 is great in the public markets, but being active in the private markets I think is important. And the best way to do that, unless you're going to go and build that muscle and invest in being at the frontier for decades, is finding some managers that you really trust, that are really high quality, working with them, and maybe doing things like co-invests once those managers have taken a position in a company.
Yeah, I think that's a great point. And again, full disclosure, not investment advice for everyone. I think we're in all of our five blockchain fund of funds are invested with BCAP, either in the venture or growth funds. I think also when you look at the structure of the market, right? And since Sarbanes-Oxley in 2001, 2, which came in after Enron, it's gotten a lot more difficult, more cumbersome to be public, which was probably a good thing because it was in response to the Enron fiasco. But the kind of unintended consequence is that I think the average time to go public for a venture-backed company went from like 3 years to now something like 11, 12 years. Um, and what that means is that you have a lot more value accrual happening in public markets. And so sort of, the surface, seeing that on the superficial surface are these trillion-dollar IPOs. Well, why are there trillion-dollar IPOs? Because most of the value is being captured in public markets. So, what I say to our family office is you absolutely should be invested in public markets. Everyone on the Fifth Era team is personally invested in public markets. But if you're serious about frontier tech, most of the value creation is still happening on the private side. And equally, when you go into private markets, you do have to be a bit careful, particularly in our sectors. They're very risky. You have to think about things like diversification, to minimize some of your downside risk. And so working with top managers is absolutely our strategy.
Yeah, I mean, I think
Um,
about the layered SPV risk that you called out. That's a lot of what we're seeing on the secondary markets, and it's often obfuscated. It's presented in sort of misleading ways at times, and I contrast that with what a typical institutional investor is going to do, which is like take a board seat and be actively involved in governance of the company, have much better information on it, and so on. So it's a different approach that I think one is a lot safer than the other.
Yeah, and putting that practically, I mean, I think we had a lot of family offices that bought SpaceX or have bought Anthropic through layered SPVs, and they're up, substantially, which we're very happy for them. But those are paper markups, and I'm CEO of a SPAC. We've had a few good things happen in public markets. I know you have. Anyone who's actually gone through an IPO or a public listing, you know, when that event happens, there's still a lot of mechanical work to actually get your shares from the transfer agent. And particularly if you want to sell or do distribution quickly, all the New York hedge funds, those guys are plugged into the tubes of the financial system. So they're getting their shares. The average retail person's they're getting their shares way before or even selling, prior to delivery and then doing a T plus 13 settlement, right? So just getting the shares from the transfer agent can be quite difficult. And when you're talking about multiple layers of SPV, that means that the shares have to go, from the transfer agent to this layer, to this layer, to this layer, and you're relying on each manager, basically to be on top of it and do that in an efficient way. So, you could be looking at a multi-month delay even from lockup expiration or registration of shares. And I think those mechanical things as well, people don't really realize. Whereas if you're an institutional firm like yourselves or ourselves, we have an institutional brokerage account at a firm and we can get our shares direct, much quicker and all of that also, I think until you actually go through it, is quite illuminating as well.
Well put.
Um, but look, Alex, I think this was really interesting. We kept you 10 minutes longer, so I appreciate you staying on a bit longer. Again, I think Fifth Era, we're invested with BCAP, very supportive for everyone on the line now or who's going to be listening later. If they want to get in touch with you or the firm, how should they do that?
Shoot me an email, aleks@blockchaincapital.com.
Great. All right, Alex. Well, thanks again. We'll have you back on soon.
All right. Thanks so much, Mitch.
Thanks, everyone.